But if I get done early, we'll just go to questions. I don't have to fill up the whole time. And then I just want to let you know, just very honestly, if I don't have an answer for you, I'll get you an answer. I'm not going to tell you something that I don't know for sure. I would rather be accurate in what I'm telling you. So even if I have to get your email and follow up with you, I will do that if there's something that I can't answer. So just want to tell you real quick, a little introduction with my experience. It's kind of funny how it all came about. Obviously 18 years ago when we pioneered our church, they kind of put it on me as a pastor's wife. I don't mind, but to figure all of it out, to set up the bylaws and the articles and all that. And I also had experience in bookkeeping and some level of accounting. So I kind of took that over, and I've been doing the church books ever since. I believe in really clean books. So thankfully, things were pretty dialed in. But then about 12 years ago, I got the opportunity to start at a CPA firm. And going back in time, I went to college to become a CPA and then dropped out and got married and had 3 kids and went through that journey. And here I am. Now my kids are at that point teenagers, and now I'm back in this. And so I specialize in 1040. So if there are 990 questions, which is the nonprofit side, I can get you answers, but my specialty is actually the 1040 side. How it kind of came about was I'm in a unique situation. I'm a pastor's wife, and I'm also doing taxes. So what happened is I began to gain quite a bit of knowledge because of the interesting status that pastors hold. It's very confusing to administrative staff at the church. It's confusing to CPAs who don't have a lot of experience with it. They don't exactly know what to do with it. So it morphed into, I did my own taxes. Then I did another pastor's taxes. Then more pastors started coming to our firm. Our firm is, for our area, our firm is a large firm. It's, Silverdale area is not huge, but we have about 2,500 clients. And of that, we have quite a few pastors that now come, and word of mouth is more coming. So that's kind of my experience. Now, one of the things that we kept seeing, even our whole team, was we would get a pastor's tax return. They would bring last year's tax return in, or we would start doing their returns, and we're like, this isn't right, or there's errors, or there's ways that ministers are missing out on deductions they should be taking because it's just out of ignorance. It's not out of ill will, it's out of ignorance. So we started compiling these things, and then what instigated this was that I was having a conversation with Pastor Hurley, Michael Hurley, and we were going back and forth, and he was asking a question. I'm like, I want you to know, in no way do I want to cause waves with anybody's CPAs, but just with this information, you're armed to go back and ask the questions respectfully that you might need to ask about why things are being done the way they are, or even go back to your administrative team at your church and say, hey, can we look into this deeper? Most of it's done out of just not knowing or hearing something and going, we have to do this. So I'm going to go into some basic things. I don't want to insult anybody's intelligence, but I'm going to start pretty basic and then build from there, because I don't know how much knowledge each of you would have in the area of this. So we'll just start out with number one, the interesting status of being, it's the dual status of a minister. Number one, you are an employee for income tax purposes. That's the income tax rate you are, like if you're in the 22% bracket or whatever. So that's why pastors get a W-2. But you're also self-employed for the Social Security side of it. So you're meeting both sides of the Social Security and Medicare on the other side of that. So what we see in our firm a lot, more often than we should, is if you look at a normal W-2, and I wish I had, it's okay, we'll just try to visualize it. Normal W-2, box 1 is your wages, box 2 is your withholding, box 3 and 5 are your Social Security and Medicare earnings, and then your taxes are from that amount. On a pastor's W-2, 3 and 5 should always be zeros. There should never be an earnings amount in that box. We see a lot of times there's earnings amounts in there, and we're like, that's not, and I get it that the church sometimes wants to supplement and say, well, we want to pay part of that for you. The better option would be to pay them more and leave those boxes blank. So if you figure out half of that, now normal self-employment taxes are 15.3%. 7.65 is the employer, 7.65 is the employee. We combine those. That's why ministers pay 15.3% on box 1 and their housing allowance. So what we would rather see is it done correctly, where there's zeros in there, where the church is not trying to supplement, because by IRS rules, it's not supposed to happen. They're not supposed to be doing it that way. The correct way to do it is to have zeros in that box 3 and box 5. Yeah.
That is if you don't have a Form 4361, right?
Exactly. Sorry, and we'll get into that. Yeah, if you have filed, yeah. Well,
Exemption from.
that's whether you not, the W-2 should look the same either way. It's how it pans out on the tax return. So we'll definitely get into that. So with those blank, you should really see box 1, there's wages. Sometimes you have withholding. You want to have the church remit withholding for you on a 941, especially if you have other employees who are clerical. You can definitely withhold. Many pastors choose not to do that. They pay on estimates. They pay quarterlies. So you'll have a wage in box 1, you're going to have 0 in box 2 because you're going to take care of your own, 0 in 3, 0 in 5, a lot of zeros. And then if you have retirement, that's going to show in box 12. Box 14, I don't know if you guys are familiar with the W-2, box 14 is where your housing allowance goes. So that's the general basis of that. Now, one of the things that we see that we try to tell people and try to get them to look at is, one of the biggest things I want to focus on is the housing allowance. And we see housing allowances most of the time set way too low. Way too low. And so let me give you some examples. One that is perpetual year after year, $18,000. $18,000. So if you understand, box 1 is reduced by your housing allowance. Box 1 is you're taxed not only income tax, but you're also taxed self-employment. Both of those combine to go into the self-employment 15.3. The lower you can get the box 1 wage, you're going to save on income tax. You can't, and opting out, we'll talk about the opting out of the Social Security. But if your box 1 wage is set too high because you don't have enough in your housing allowance, you can't reverse that once that's done. So we see pastors come in and it's $18,000, $24,000, and they're happy with that, and they're kind of thinking, I'm doing really good because I used all of my housing allowance. Because there's a reconciliation. We say, what are your actual expenses? Well, what's happening is they're spending $29,000, and they feel good about it, and we're saying it's the exact opposite of that. You never want to use all of your housing allowance. So what we would encourage is administrative staff to say, and there's also some literature that the pastor goes to the staff and says, this is what I want or the board, and says, this is what I want my housing allowance set at. And the board, a lot of times, I think they feel a responsibility, like if that box is too high, box 14 is too high, we could get in trouble. So they're worried. They're worried the audit, the IRS is going to look at them. There might be an audit. Well, I can assure you, I do. For the last 8 years, I've written all of our IRS correspondence, and I've read as extensively as I can from some really, really good people that the reconciliation always happens on the tax return. So your administrative staff, if you go to them and you say, listen, this year, I truly believe that I need, between all the things, and I'll go over those, I need $47,000. Hopefully your board will say, good, it's not my responsibility. We'll vote on that. Your responsibility is to track your expenses, and when you go to your CPA or you do your taxes on your own, you need to be honest about it, and hopefully pastors are being honest about it. So it takes the burden off of your administration to feel like they're helping you to be, in compliance. So I might shock you with some things here that we have. I don't want to be over generous. I'm not telling people to have $120,000 housing allowances on all of that. But here's some of the things we found. We've had pastors come to us and say, well, my administrative staff says that I cannot have 100% housing allowance. I have to stay within a certain range. The IRS ruled you can have 100% of your wages designated as a housing allowance.
It's
It's
95%?
it's 100, if reasonable. If reasonable. So let me give you an example, because we talked about this. If you have an associate pastor that maybe they have a part-time job somewhere else, and they're making $45,000 at your church, if you tell them they can only have a percentage of that at their housing allowance, you are penalizing a lower paid pastor, a minister, which is what should not be happening. They're the ones that actually need that to carry the burden of the self-employment tax. So in reality, you know, what needs to happen is you look at them and you say, okay, if you have rent, or if you're renting, or if you have a mortgage, tell us what you need. And then we can designate it as 100%. And then if they don't use all of it, again, it gets reconciled on the tax return. So we want to see a generosity to say, okay, this is reasonable. The IRS is not going to come after these people for having that. So if that associate pastor, if he has almost all of his wages needed as a housing, maybe box one will say 7,000. Maybe box one will say 5,000. Maybe it'll say 3,000. That's going to help him out rather than you telling him, we're going to give you 7 as a housing allowance. That's not reasonable. That's not reasonable. So we want to shift that. Actual housing expenses, fair rental value. There's a rule that says you have to take the lesser of. So let me tell you some scenarios that used to play out. Fair rental value. People would go, oh, well, darn it, it's probably going to be lower than actual expenses. Fair rental, if I put a new roof on, you know, I'm worried about that, the fair rental value. Well, I want you to know that this is the last edition anyone will ever be able to get. It's called Worse Income Tax Guide for Ministers. It's the 2021 edition. The reason is she passed away in 2022. Beverly Worth has been putting these out since 1973. If you can get a copy, I think you can. If you can get a copy of this, it's one of the best resources for ministers I've seen out there. She's been doing it for so long, and I'm like, oh, it's a bummer that, I mean, obviously she's gone, but it is a comprehensive, it's just such great material. So I would tell you, you know, after this, if you want to get a copy of it, go online, go to, you know, Amazon and see if you can get a copy of it. Also, another good resource, I know it might be dry reading, is IRS Publication 571. It's about 17 pages long. It complements this. It's right from the IRS website, and it's super helpful.
What was the name of that book?
It's Worse Income Tax Guide for Ministers. We, for a long time, were even using the 2013 edition. A lot of it stays the same. If you just read the IRS updates, you can pretty much use what's in here and then update it with the most current information. A lot of the rulings have stood, thankfully, for pastors. We don't know if that will always be the case, but a lot of them have stood, and they've actually been strengthened by the rulings in the courts in specific cases. So let's get into the fair rental value really quickly. The fair rental value is the value you could conceivably rent your fully furnished home for, and includes the following. Now, this is the part that might shock you, because it kind of surprised me, and I also backed it up. It's in this book, but it's also in, I'm going to pull it up here real quick. Okay. It's also in the Clergy Financial Resources online. So you look at a home and you go, okay, what would be a fair rental value? So I'm going to take a home. I'm just going to get a general home. The general rule is 1%. You take the fair market value of your home. So let's say your home is worth $500,000. 1% per month rent. Shockingly, that would be $5,000. That sounds kind of crazy, doesn't it, that you could rent your home for $5,000? It seems generous, but follow me on this. So they say 1% per month of a $500,000 home. If you had a $180,000 home, it would be $1,800 per month for rent times 12. That's your base rental value. On top of that, now you have a fully furnished home. So now you have to go and maybe ask a realtor, what could I charge to rent a fully furnished home to someone? Because that's what a parsonage is, it's fully furnished. Well, some people land on $500 a month, some $600, some $700 based on the size. There's a range in there. So if you did that, you could conceivably say $500 a month to rent a fully furnished home, that's $6,000 a year. Add that onto the fair rental value. Now you add your utilities. Let's just conservatively say $3,000 a year. Now you also get to take home supplies, not toiletries, but your cleaning supplies, your lawnmower gas. I mean, what it would take to maintain. Furnishings, if you have to, all of those things. Decorator items. Kind of think of it, the Airbnb whole situation has kind of thrown a loop into like, what would people can rent their home as an Airbnb for a phenomenal amount of money. So we don't want to go so far on that end to say, it'd be this much a night. But conceivably a $500,000 home could easily have a fair rental value of $69,900. Okay, so let's stop there and you go, wow, you don't get to take that. You don't get to say, I get that. You can designate that as your housing allowance on your, with your staff and your board, and then your box one, if you have, let's say your pay is $80,000, your compensation package is 80, then you're going to have 69.9 below, and you're going to have the rest, which is not a lot, up top. That's your fair rental value. The rule is you take the lesser of. So now we default to actual expenses. But the great thing is this gives you a lot of play in worrying about whether you have a repair in your home, whether you're going to come in over the fair rental value. A lot of times pastor would go, oh gosh, my actual expenses are going to be over my fair rental value. The way they've generously set this up is that's very hard to have happen, unless you're in a $100,000 remodel. And then I would say space it out over years. Like if you can do it, September through, and then add more in, kind of a thing. So it gives pastors the ability to not so much worry about, great, the lesser sounds awful. And that's why a lot of these pastors have a $24,000 housing allowance. $2,000 a month rent, that seems reasonable in our area, we'll give you 24. Then we go, you're probably spending more than that. If you're really tracking your expenses, you're going to spend more than that. So that's one thing I wanted to kind of highlight, to maybe shift the idea of, if you're honest, it's going to reconcile. Now, I'll give you an example of something that we see happen for pastors that use too much, and then they feel good about it. Let me give you a scenario here. Let's see. I find my notes. Okay, a pastor has a full compensation package of $75,000. Box one wages are listed at $50,000, and the typical housing allowance is $25,000. They spent $30,000. So now they're $5,000 over. That goes nowhere. They lose it. They lost those expenses. Box one wage cannot come down. We can't do a reconciliation on the tax return to say, well, they used more than we thought, right? So let's take that same scenario. You have a pastor, $75,000. Box one wages now go down from 50 down to 30. Housing allowance comes from 25 up to 45. They use the same 30,000. The extra 15 flows back into box one. What did they have? They now have the 45 they should have had in box one that they can't do after the fact. So that's why we want pastors to start focusing on higher housing allowance, higher amount in box 14, lower amount in box one. You're going to win every time. Now, the other thing that has been debated is housing allowance. We used to think housing allowance, it's good to have your housing allowances set in December of the prior, right? Have your board vote on it before January starts. But the rulings have been, that's a great, you should have something in place. But let's say a pastor hits June and they have some flood damage where they have a deductible, there's things that happen, they're going to have to do some out-of-pocket reno, and they're like, I didn't set it high enough. If they go back to their board and they get a higher amount proved before the money is spent, that's allowed. We used to think it wasn't, but the rulings have been that it is allowed, not January the following year where they're making out your W-2. It's before the funds are released. So if it's mid-year this happens, go to your board and say, listen, I'm going to have to spend some extra money I didn't realize I was going to have to do. They need to note it in the minutes. They need to vote on it. And then when you get to the end of the year, they can legally put that higher amount on your W-2, and you're okay with that. And that works, and you're covered if the IRS came after and said, yes, that was unexpected, and we did it. Now on what we've learned, me personally, is we just set our housing allowance pretty high every year. We just, our board agrees, they understand we know what we're doing, we're honest, we're going to do the right thing. So I won't belabor that too much.
Question on that?
Yeah.
Do you need like the meeting minutes, or if like you kind of have it worked out, the accountant will just adjust it, is that fine? Or will the IRS come back and say, well, where's your meeting minutes?
So you're supposed to have it in your meeting minutes. You're supposed to have even if it's a phone thing, somebody's got to document that there was a revote, it was an approval, and then you have it in your board meeting minutes. If they if you were to get audited. We don't see a ton of auditing of this. I'm not saying to, we don't want pastors to get, like it's never going to happen, but just have your documentation. Just like we tell them when you reconcile, one of the things that we don't like to see is, did you spend all your housing allowance? Yeah, I spent it all. We go, no, we want your records. We want to know, we want to see, because we can't help back you if you do get audited for that. We want to see you keeping tracking those things. Hey. I don't know. Okay. Yeah. Sorry. I don't know where he's at. He's somewhere. Record keeping is key in all of this. It protects you. So we would say always do the record keeping. But yes, board meeting minutes, probably your chances of being audited are one half of 1%. But it's better to have it than not and have to go back and do that. One other thing I want to key in, and then we're going to move on to some other things. Again, 100% of the housing allowance can be designated, or 100% of your salary can be designated if it's reasonable. Take that back to your associate pastors if you have them. Take that back to them. Take it back to your people. Read up on it, and you'll see it in the legislation that it is allowed. And it's going to help them a lot, especially part-timers, $35,000, whatever they make. Okay, one other thing that we ran into when it comes to the ministers, a lot of churches are now going to the female and the male are both now ministers. Didn't used to be so common years ago. Well, we're running into this issue where housing allowance can only be used once. So only one person in a married couple, when both of them are ministers and both of them are paid on W-2 and both of them have dual status, there is no tax advantage to that second person. So we've had people shift over from administrative. They've been administrative for years. They're the pastor's wife. They've been doing books. They've been doing office stuff. They've been managing. They get licensed, ordained, because they are doing ministry. But now it's just hard because now they're considered a minister. And they go, the same pay does not go the same distance. So that is something you need to be aware of, is we've had people being shocked by that. Like, now your box 1 cannot be reduced by box 14, so you're paying income tax and you're paying 15.3% on that box 1 and that whole amount. So you just upped it 15.3%. So what we encourage people is to go back to their churches and just reasonably negotiate and say, if I'm going to be a minister now, how are we going? I mean, because a lot of times the church wants to help you. They're not out to save money on their pastors, I don't think. It's not a great place to be as your board is going, how can we save money and cost you money? It's just a natural thing of how things are morphing and changing in ministry. So just be aware of that. So if any of your people are thinking about getting ordained or they've got degrees and the wife is now going, I'm going to be an ordained minister, think about that.
You can't hurt them if they've already been working in a different role, correct?
If they're already in a different role and it's what substantially they are doing. So we've seen the shift of a lot of times, like, let me put it this way. I am not licensed. I am not ordained. We say we're lead pastors, but I'm not a pastor. I don't have a degree. I'm also not on staff, which I just am not on staff. I'm a volunteer at this point. And that is a lot of pastors' wives, but there are plenty of pastors' wives that are on staff.
Right.
They can be administrative, but we're seeing more and more of them get degrees, be licensed as ministers. They're dual minister status on the tax return and in life. And we've seen churches shift over to where they're no longer administrative because substantially they're doing more ministry activity. Now, they say all pastors do administrative. All pastors are involved in some sort of administration. But when you're ordained, then the church has to really read up on the rules and go, okay, if she's leading Bible studies and she's speaking from the front and she's opening, closing, doing prayer ministry, if a substantial amount of that is now ministry related, a lot of them are shifting over to, you're no longer administrative, even though you do some administration. So look into that. I don't want to get too deep into that, but it is happening. And then the churches are unaware. They're like, okay, we're going to switch you over. And they have no idea the tax ramifications to that minister because you can't take a housing allowance twice for the same home. You can't take it on a second home either. So, all right. Another area that I want to make sure that I cover, and some of you may be aware of this, but the Tax Cuts and Jobs Act that when Trump came into office, he did the higher standard deduction. A lot of the unreimbursed business expenses went away on Schedule A for itemized deductions. A lot of pastors thought that the 2106, which is the form that you record your unreimbursed expenses, they thought it went away. It didn't go away. It went away in one direction. It went away on your Schedule A, where you get you take your property taxes and your mortgage interest and your charitable contributions. It went away there. It did not go away to reduce your self-employment tax. So now I will say this. A lot of churches came up with reimbursement plans because they realize it's like, okay, so now he can't take that. They didn't think he could take it. So there's two, quickly, I'll go over very briefly. There's a accountable plan and a non-accountable plan when it comes to reimbursements for pastors. The accountable plan is where you have to submit the receipts. You might be given money a month. So they'll give you, $300 a month. The pastor goes to, he goes to coffee and he ministers and he drives here, goes to the hospital. They give him a stipend and then he accounts for it either monthly or whatever. So all the receipts get returned back to the church and he reimburses them anything, that he doesn't use. Those are not recorded as income. They don't go anywhere on your W-2. Non-accountable plans, where you just $500 a month to the pastor, cover your stuff, cover your mileage, whatever, those are included as income. Mm-hmm. They have to be part of your salary. So those will go in box one. But here's where the rub is and people miss it. It's the 2106, which is your unreimbursed expenses. You get to now take those to offset that income, what you did spend. Right? So it might not be 100 for 100. It'll be maybe you got 100% and then maybe you did spend 85 of it. The 2106. I'll tell you how we do it. We don't have that plan at our church. We record our mileage. We record his coffees. We still do it the old school way. Mm-hmm. Whether it's right, wrong, or we just haven't had a shift in that. I record all of that on our tax return because even though I don't see it in my itemized deductions, I see it flow right over onto my clergy worksheet for SE tax and it reduces it. So if you have any ministers who are associates or even senior pastors who don't have either one of those accountable or non-accountable plans, they should still be tracking expenses that are involved. Parking, if they're going. I mean, if the church reimburses them or they use a church debit card, that's a different situation. But if they're actually have incidentals that they're just kind of eating, make sure they record those. They will get those on the tax return because it reduces that 15.3%, the amount that's subject to that. So I don't know if that's new or not, but I just don't want people missing out on that. It does flow on the return, and people, I'm not going to count it anymore. I'm not going to get it. You just don't get it on your Schedule A, but you do get it. You got a question?
Yeah, lots of them.
Oh, no.
I'll wait until after.
Okay, wait till after. Okay, save them up. All right. Okay, real quick, I'm going to go into, how much time do I have left? I feel like I don't want to speed talk, but I feel like it's flying. Okay, I got some time. Okay, now, Social Security and Medicare, self-employment, a lot of pastors opt out. And I think, I don't know what percentage of like MFI pastors do not pay Social Security or Medicare. The only thing I would say about that is if you read all the literature, it just says, number one, it is a very personal decision. No CPA, no financial advisor should tell a pastor what to do. It just gets dangerous when you advise people on that. But what they do say is you've got to know the regulations on it. And the regulations are, it's got to be prayerfully considered. It should never be done for financial or economic reasons. Mm-hmm. Like I could do a better job than, so they're saying that's not a reason to opt out. The election has to be made on the second year that you become either you're hired as a minister or you become ordained if you're shifting position like from clerical or, on the second year by the tax deadline when you earn over $400 in self-employment. They do not have to be consecutive years. So let's say you had a year where you started and you made a little bit, and then the next year or the year after you took year off and you're doing something. If you don't make that second year's income for 2 or 3 years, you now have to the following year. So, but most people, once they start, it's going to be 2 years. If you fail to make the election to opt out, you cannot do it from that point forward. It's just not a situation where you can. Now they do have some odd scenarios where someone has a change of faith, they have a change of denomination, they have a change, and then they will revisit that if you're, but not if you're just transferring to a church in the same denomination. But it has to be a complete change, and that might open the door. You do it by filling out Form 4361. They say that you should even keep notes on your scriptural studies as to why you came to this determination. And it basically says that the reason has to be a genuine religious belief and conscientious objection to public insurance established by the Social Security Act. So you have to go and study scripture and come to the determination. Listen, I disagree with that. I have a personal disagreement with the Social Security Act and what that established in public insurance in that way. So now, okay, if you've made that election, they just say have a robust retirement plan. Very robust. They say 20 to 25% of your income should be going to a retirement plan, because now you're on your own. And I have read, it's interesting because we all believe Jesus is coming back. We all want him to come back, but they're finding that a lot of ministers have not planned. And then they retire. And then they struggle because they thought, well, before my life is over, before I retire, Jesus will come back. It's never too late to start retirement funding. It's always a good plan to do that. Once you obtain that election, that 4361 exemption, it is non-revocable. You can't change your mind. There have been windows of time that the IRS has opened up the ability to revoke it, but they're few and far between. So they say prayerfully consider. Tell your people, if they're coming on staff and they haven't, tell them to do as much research as they can to come to a decision. There are people who worked my husband had a secular job for 20-something years. He's vested in Social Security and Medicare. He's already got his 40 quarters. You know what I mean? So you have to look at the individual tax situation of the person and realize, like, would this be bad for them? Are they 20-something years old going straight into ministry? And they're just like, oh, somebody said do it. That's never the reason to make that huge of a decision for your life to do it, unless they are entrepreneurial and they already have fantastic financial, they're set up, or, maybe they have a trust fund somewhere. I don't know. You could do that. Anyway, so retirement planning, a little bit of time on that. 403Bs, are you guys familiar with 403Bs? Okay, 403Bs are tax sheltered accounts. They're usually, you'll see teachers have them, and then ministry pastors have them. There's other kinds. There's 408Ps and Ks and 401Ks. Sounds like the alphabet soup. 401As. There's a lot of options that you can have for setting up good retirement funding. I want to tell you something kind of cool. If you have a 403B or a 401K that's set up through your employer, that goes in box 12. So when I'm talking about a wage and then your housing, that box 12, it's tax sheltered. That also comes out of your wage. Your box 1 wage drops. So let's say you put, and they all have different limits. So you have to look at the limits. If you don't have a financial advisor, you might want to contact one, because each one some have matching, some have higher max contributions that you can put in them. Some of them are pretty generous. So let's just say somebody puts $20,000 into their tax-sheltered 403B. So the 403B is going to show up in box 12. It's going to reduce your... That's a beautiful sound, I want you to know, though. I love that sound. I do, I love it. So on that person that had the $30,000, remember I said the 30 in box 1 and the 45 for the housing allowance? That box 1 wage is now 10, because 20 of it's going over to box 12, which reduces, it's your pre-tax retirement savings. You're not going to be taxed on it. It sits in that account. This is the cool end of this. Okay, 403Bs and 401Ks that are specifically contributed to while you're a minister, you can use a housing allowance when you're retired. I don't know if many people know that. Maybe you already knew this. As a minister, you can have a housing allowance as a retired minister, not getting a W-2, getting a 1099-R retirement distribution from that 403 account. So think of it this way. You put $20,000 of pre-tax money in your 403B. That money is designated as ministers. You retire, you designate your occupation on your W-2 as retired minister. You take 403B distributions. Housing allowance is your actual expenses. You never pay tax on that money. On the amount you use, yeah.
Is that only money that you invested into a sanctioned plan while you were a minister?
Yes.
Okay.
So, and one thing I wanted to caution people about is a lot of times if you have a financial advisor, they'll say consolidate, roll it all together. You have a 401k when you work for this and you have a 401k. Never do that. It has to be, the money cannot commingle. It has to be designated. So we tell everybody, be careful what they want you to roll it into. A 403b and 401ks are very similar, but you never want to roll it into an existing 401k that you have a balance in from something else. You have to open up a separate if you're doing any movement of the money. So as long as it's designated, it's a beautiful, I mean, I don't know how many taxes, we do it all the time. They have a 1099-R from an account, a specific 403b. They don't own their home yet. They're retired. They still have a house payment. And we take their house payment, their property taxes, all of those same things I listed, and they can take a $35,000 distribution, and if their actual expenses are 29, they're only paying on 6. And that money never got taxed. And that's a beautiful tax shelter. So we encourage people, look into this because, and granted the other money, and we have a lot of pastors who did have other jobs, and they take money, but they do it strategically. Take a little bit out of this, a little bit out of that. What do they want to save for? Maybe they want to do that 403b before it drops. You know what I mean? Before they pay off their house or whatever. So great. Look into them. There's a lot of qualified accounts that are a great tax savings. Not only are you saving tax every year while you're filing your tax return, you're saving it on the back end when you're a retired minister. Okay, a couple things. How we doing? Got my time. Okay, got a little bit more time. Some tax filing essentials is number one. How many do you guys use CPAs or do you self?
We do self.
Okay, then you know your own retirement package. So a lot of times what people do is they give us their W-2 as a pastor, and we go, what's your compensation package, please? Because if we don't know what your salary is, we don't know if there's a mistake on your W-2. We have had more than once Box 1 not be reduced. They have a housing allowance listed down below. Box 1 never got reduced. And we're going, something seems wrong here. And if the CPA or your tax preparer is not looking closely, they might think, well, a lot of big churches, I mean, there's a wide range of what you can be paid as a minister from 35 to 150, and all of it's very reasonable. So if they don't do that extra work to say, what were you paid? We've had people where I'm going, okay, wait, box 1 says 85, and box 14 housing allowance says 45, and it's a small little church down the road. I go, I'm not trying to be invasive, but I do have all of your financial stuff. I know you know what I mean. I know all of it. Can I please ask you? And they're like, well, my compensation package was 85. And we're like, I'm glad I asked. Because if we don't catch that and they don't pay, they don't know. Most pastors, this is not their thing. They don't know. So they're trusting, and then we're incorrectly preparing a return that may not get caught. And if you don't refile, if you don't amend it within 3 years, you lose that money. It's gone. The IRS doesn't care. They can go back and look back till the end of time and tax you 20 years back. But if you miss that filing deadline 3 years after the due date of that return, you're not going to get that money back. And so we just tell you, give them enough, give them everything you got. If you go to a CPA, this was my package, $85,000. Now we make sure they match. We make sure it adds up. We also want to catch if they failed to remove the 403b contribution from your box 1 wage, because now you're paying tax on it if they don't catch that. So I'm not saying that a lot of churches do in-house accounting. We do. I get it. We don't all know everything. It's not done on purpose. It's just done out of, if you have a really strong firm that's doing your payroll and all of that, most likely they're going to be good. Sometimes they even miss it. So check and check again that all of those things are adding up in the correct way for your senior pastors and your associate pastors that are in ministry. It's important that we catch it right then and there. we will have them amend the W-2. It's a lot easier to amend a W-2. Just correct it. We'll have them correct it and say, this is what this should look like, to make sure. Always provide all of your housing expenses actual. It protects you, it protects your CPA, mostly protects you, and it also makes you aware every single deduction that you're getting. It's inconvenient to go get lawnmower gas and put it on a separate receipt, but guess what? I do it. Because in the end, I want to use as much of those. If my housing allowance is at $60,000, my goal is to honestly get as high as I can to have less flowing back. As it's just called excess housing allowance. It's not an IRS audit issue. That you're doing the right thing. You're being honest. I didn't use all of it, so it goes back up. That's where you're just being honest about it. But boy, oh boy, if we're buying a replacement blind for a window, if we're buying cleaning supplies, we are documenting all of that because I'm inching that dollar because every ounce I can keep out of box one saves me on my income tax. I got to pay self-employment if I'm not opted out. If you're opted out, you still want your box one as low as possible because it helps you in the end. See if I missed anything. I think we're going to have time for questions because I think, how am I doing? You got 41 minutes. I'm over. Let's go. Questions. I'm 1 minute over. Anywho, and anyway, I will, like I said, if I can't get you an answer, I will be honest with you. If I don't know it, I'll say I don't know.
I had no idea about the self-employment piece. Is there a short way to explain that? Because my lead pastor is already self-employed. He has his own business. He's not a full-time pastor. But he gets a housing allowance because our elders told us you need a salary. He doesn't want a salary, but they're like, no, take a housing allowance.
Right.
So he has a ridiculously, disgustingly small housing allowance that he's okay with. And, but we were also told because the first year he was paid a salary as a pastor, his W-2 or box one was blank, and he got yelled at by his tax preparer. They're like, you need to have something in this box. So now I'm paying him $17 a month salary.
Okay.
To fill that box.
So I get where you're coming from because they're saying because here's what happens. A lot of times if you pay if it's a zero W-2, a lot of times our tax programs squawk. They're like, what? There's nothing there. There's nothing there. A lot of times if 100% of the housing allowance is designated as a wage or the wage is a housing allowance, it can be a notification. It's just a reporting document. The church issues a document saying, hey, we paid you $15,000 in housing allowance. That still is subject to SE. If you haven't opted out, that's income, even though it's not reported on a W-2. So there doesn't necessarily have to be a W-2 generated, but the church has to hand them if it's a written on letterhead, whatever reporting document saying we paid you $15,000, that goes on the clergy worksheet. You have to go up and reconcile that. On there. So yeah, I get it that there is no reconciliation. There's nothing flowing back to a box one wage because there isn't. Hopefully they're not going to give him more than what he needs. I mean, that's the only thing you run into is if you didn't use it all,
he's not even getting.
It's just minimal.
It's
okay.
$1,500 a month.
Okay.
Is what he's getting.
Okay. He's done more than going to use that. More than going to use that. By the way, I don't know if I shared this with you real quick on the whole, $69,900 for the housing, for the fair rental value. We have a new apartment complex up the road from our house. $4,300 for a 3-bedroom apartment. That's $51,000 in rent for a 3-bedroom apartment. I'm just telling you, don't be scared to go reasonable and realize that that's not scary. But yeah, in his situation, he does need to put that on his tax return. That is taxable to him at the 15.3. It doesn't go towards it doesn't go towards his income tax numbers, his wages. There's going to be nothing there. But when it's the SE tax worksheet, that has to go on there. So have him prepare for that. And by the way, estimates are a lot of pastors pay estimates. We pay them. They're due April 15th, June 15th, September 15th, and January 15th of the following. Fourth quarter runs into the new year. If you don't have withholding on your wages from your church and they don't do that, you do want to pay those. A lot of people don't understand. The IRS wants their money timely.
Yes.
And they do like, I mean, the penalties aren't awful, but who wants to give them more? And so they just want you paid in at 90% of your last year's projected, or 100%. And 100% is hard to predict of the current year. If you're in a higher income bracket, like some people have lots of rentals, or they have a spouse that has a high paying job, so they're in another bracket, then that can bump up to 110%. They want you covered. So yeah, they just want, I might have gotten that wrong. Let me make sure I didn't get that. I want to make sure I give it to you not backwards on here. Estimates, where is my estimate page? Oh, here we go. Okay, it is, sorry, it's 90% of the current year, 100% of the prior year. I had that backwards. So if you satisfy the 100% of the previous year, they can't charge you a penalty. Or if you're paid in at 90% of the current year, but we don't like to tell people to risk that because it's really hard to predict your income at the end of the year. That's why you go to a CPA and have your taxes figured out, because they'll figure that out for you. So yeah, that's one way to avoid being that terrible April day where they call you and say you didn't withhold, or you don't have enough. It's better to just piece it out. So that's helpful. Yeah.
When you talk about keeping track of the housing allowance, where you have all the receipts and everything,
Yeah.
what is covered under that?
Oh, you mean what can you take?
Like, it's your mortgage?
The full mortgage, by the way, your house payment. See, on
How
schedule,
about
yeah.
Utilities?
All of that. Yep,
Okay.
utilities. Yes, and in fact, I had. I love it when you have too many notes and then you can't find
Yeah.
what you need in there. Do.
We're gonna get a raise in our housing allowance.
Yeah.
We've been kind
Yeah.
of eating a lot of expense.
So that would include any repairs, also money for repairs?
Repairs, yes, repairs.
We could amend it.
Repairs are included. By the way, improvements are also included. So we just did a house reno. Our house is 20 years old. It's not super old, but it was time for new flooring and new carpets and some upgrades on our trim. And so that's one of the great things about having a house allowance that's already high. And then we went, I think we should buy our carpet in January.
Yeah.
So we did the reno for most of it, and then purchased our carpet in January to flow into the next year. Just timed it, just happened to happen that way. But yes, renovations are allowed in that, any of those things. And like I said, the little incidentals that you don't realize add up, they add up. So take everything you can. And I had a list, and I will find it in my notes afterwards. Oh, here we go. Sorry. Your full house payment, real estate taxes, your insurance. Don't forget your homeowner's insurance in that. All your utilities, your cleaning and maintenance supplies, furniture, appliances, even your decor. You replace a couch, that goes on there. You replace a TV set, anything that you would think in a furnishing of a home. You buy a new bed, that goes in there. All your repairs and improvements. And again, we say receipts. Keep receipts.
Yes.
Keep them all. If you like to scan them into a file or whatever, but it's always better to have them. We have not seen a lot of audit exposure to ministers. We just have not. I'm not saying that won't change, but if you follow these things if you follow them and you're really, really honest and you keep good records, you're going to have everything they need. Most audits, people get scared of audits. If you don't have good records, people get nervous. Now listen, the worst thing that can happen in an audit is you pay more money. They're not going to send you to jail. You know what I mean? You're going to go, oh, darn it, I probably should have kept better records. Or, they can assess more. But like I said, I write correspondence. All year long, I write IRS correspondence for people who are panicking because they believe that the IRS is coming after them. They do send out letters that are not very friendly, but we know their language and we deal with it. And we write responses. I write them, I draft them constantly, and they are very reasonable. Even when they do an actual sit-down audit, you do the best you can. If they're not happy with something, they'll just disallow it, and then you just kind of get your pocketbook out. But if you're honest about it, there's nothing to worry about. They're just checking records, and it just doesn't happen very often.
Like we have somebody who does our lawn. Does that count in parsonage?
Not the lawn care person.
Okay.
Yeah, the lawn mower, the gas. Yeah, so if you pay a housekeeper, housekeeping cannot be included in that. They just don't allow. Those can be kind of astronomical in that. So they say, yeah, not a landscaper or a housekeeper is usually not. They're just saying all your supplies. So if they show up and they provide it all, then you pretty much don't have a write-off for that portion of it. You know what I mean?
So how does that translate over into, like, if you do a remodel, you're paying for a contractor? You still pay for them, right?
Yes, you can. If you do, yeah, exactly, yeah. Which is kind of a weird thing. I
Yeah.
mean, maybe they look at it that renovations and repairs are necessary, whereas landscapers and housekeepers are more an optional thing. Like if you, I don't know. I mean, I can look further into that. I can actually get you the literature on that, because I was reading as I was looking in there where those were excluded, but I'll get you the literature on exactly why. There might be a ruling on that where people are like, well, I'm paying my landscaper $1,000 a month and my house cleaner $1,000. You know what I mean? And they're like, yeah, no, I don't think so, and kind of thing. So, are we good? Oh yeah.
Is there like a template or somewhere we can go to get the reconciliation for the housing allowance?
Yes. In fact, what I was going to say is I should probably make this available to you guys. Somebody wanted my notes. They're like, can I have your notes? And I'm like, okay, give me your email address. I'll get the notes to you. I'd also love to email some template forms. This book is a resource of template forms on figuring things out. And it's so nice to have a list
Yes.
as a reminder of everything. Even our Schedule C, self-employed, they're like, what can I take? And we give them a comprehensive list, because it's like, if you don't know what you can deduct, you're losing out. And self-employed Schedule C people pay SE tax just like a minister does. They want to get that net income down reasonably as low as possible, so don't lose your expenses on it. So yeah.
Thank you.
Yeah.
Yes.
I hope this was helpful in some.
You are way smarter than me.
Well,
So helpful.
I thought, okay, if I could even help one person look at it differently, then that can help. And I even told Pastor Michael, I said, listen, I don't want you to go back to it's not an I told you so or you were wrong, we were right. It's like, let's all get smarter together and shift what we need to shift in our perspective to make sure we're doing ministers. We need to do them the best we can for finances, because it's not exactly the highest paying.
Right.
You know what I mean? So it's good.
Well, that's what
And
we
they're
took
not
43.
accountants,
They're pastors, so
They are.
Yeah.
Yeah.
We took 4361. My husband was 21.
Yeah.
And it was like, literally, it was the decision of 15% of our $700
Right,
income. We
right.
can't afford that.
Right.
And so we did it, and now we can't go back.
Right.
And so it's just been really like,
But planning is great, and I don't think either one's a mistake. Everybody has to figure out, and I know that there have been people I've talked to them who are like, I really regret doing that. And it's like, well, but no, that's okay. Just go forward now doing the best you can. If your kids are out of the house, just load as much, max out your contributions, and then do what you can to get your house paid off. Do those kind of things. And then if there were ever a window to opt back in, I don't know what that entails. I don't know if there's a massive payback or what. But yeah, I don't want anyone to regret. We just want people soberly considering it moving forward if they have not done it. If they're new and they're now a minister.
We would change how we talk to
Yeah.
young ones coming in.
Yeah.
And say, this may or may not be a good idea.
Right. Look at Dave Ramsey. Look at the different guys that will say, listen, they say 15% of your income should go to retirement or some sort of planning. That's really easy when you have 3 small kids and braces. That's not. It's hard, but you can, it's good to do a little bit. But if you're going to opt out, they say 20 to 25%, which seems astronomical. But, and then we'll all get it in there and Jesus will come back and we'll rejoice anyway. It's all right.
Amen.
Thank you, guys.
Our email address?
Yes, I would like that.